All right, real quick, Tobias, I'll answer you in a second. Let me get to Taylor real quick. To Duhei here. Okay, so Duhei, real quick. So in the example I just went over with everybody, I'll just show you again. And it's this level we're talking about here, this one. Orange. And then maybe make this one white, just make it a little different. So every day you should be adding, every day you should be adding your current day open. This is a level that will be on every single day of the market. So it's consistent. You'll have it, and it's directional. Higher probability if we're above it, we try to go up and into whatever next level we have. In this instance, we have these two levels, and then vice versa on the way down. In this instance, we have PML. But right here is very important. So, and you can do this in a number of different ways. This is just the quickest, most efficient way to do it, in my opinion. But if you go to your Fibonacci retracement tool, and it doesn't matter what broker you have or whoever charting system you're on, you go from the low of the day to the high of the day, right? The very, very high of it. And all we're doing is just tracking everything of that, right? And then we're marking the 50% of that. That's all we're done. All we did was just mark the 50%. And I don't normally like to tell people this because you should draw them directionally the right way, but it doesn't matter on your 50%. You can draw this backwards and you're going to get the same exact level. So it's okay if you draw it wrong. It's just make sure you are drawing from high to low or low to high, and you are marking that 50%. And these are the two probably most important levels on your chart every single day. We're directional from them. When I say we're directional from them, I mean if we're above them, we're trying to move away, to the upside. If we're below them, we're trying to move. The market's trying to move lower. In this instance, we're breaking down under one. We're moving towards the other one, right? We're not always going to perfectly touch it. Sometimes, a lot of the times, you'll see like a low, then you'll see like another fake low, and this is what we call like a liquidity grab, and then it does like a retake, and then you get your higher low and build up. And a lot of the time you have like your morning session, and this is like lunchtime, this is like your last 2 hours of the day, is how that like usually pans out when you see a day like this. Or you get a really big red day, and it does break this level, and it continues down. Then that's also possible. I don't want to sit here and just talk about bullish scenarios. That is also a possible scenario. But we're very directional. We're very biased from these levels, if that makes sense. Yeah, the fib tool. And since you're on TradingView, your levels are probably going to be a little bit off of mine because our quotes are different. But that is how you do it. So just make sure you're consistently doing low to high or high to low from your previous day. And then honestly, and this is what I say is the hardest part for a lot of my traders, because a lot of us are like me, and we're just like quick attention span squirrels. Sometimes you leave this up on the charts. Like, let's say 2 more days go by. Like, I could still be using this level, But we'll get into more of that when you see more of that. Like here, I'll go back a couple days. I'll try to show you what I mean. I don't think this is going to work, though, because I'm pretty sure this is all still fine. So I'll go back a couple days. We'll draw this 50%. And we'll draw this day's open. So, like, I'm not saying these levels are no longer like what we're looking at because we're way up here now. That's not what I'm saying. I'm just saying, like, we're not as focused on them going into that next day or going into a couple days later. You're more focused on that more recent info. So a lot of the time you can just delete these and then move on to the next. But as you can see, like in this instance, that's why I said this is going to be a bad example. We've just kept going up in range trading and going up. So it's not actually hurt us to delete them yet. Like you've actually been able to like leave your halfway point from this day, leave your open from this day. You've actually been able to leave some of the more recent levels up because it's not really affecting anything. So like on our way back down, we could say, oh, well, we're going for this day's halfway point, wherever the F that is. That's not how you draw that. Come on. Come on. You can do it. And then delete it because we don't need all that junk. So we could even say, let's say a big red day is happening and we're breaking this level. We could say the next bigger priority level is down here at 662.50. There could be an emerging candle here. There could be like this day's close right here. I'm not saying there aren't other levels there. I'm just saying the next biggest important level is right here. That's kind of what we're referring to. But yeah. But let me know. Did that make sense? Was that helpful? Hopefully it was. And I'm glad you asked again, because some people think I get annoyed when I cover certain topics, which I do. I'm not even going to front with you guys. I'll be honest. I do get a little annoyed when we have to cover certain topics over and over again. But I actually really enjoy covering this, because this is the meat and potatoes, as one of my favorite YouTube channels says. This is the meat and potatoes of the system. The current day open, the previous day halfway point. Those will almost always be your most helpful levels. Everything else in the system, like you see up here, I have these labels. Previous day high, previous day low, previous day close, previous day open. I don't have them marked right now, but on here, but we have them here. The pre-market high, the pre-market low. You know, I'm not trying to say like we're famous for the pre-market low stuff, pre-market high stuff, because it is how we started out, but we have definitely adapted from that. We have taken advantage of our advantage with the pre-market information, because we used to not even mark this. We used to only mark these levels. Previous day high, previous day low, which you should still mark all these levels. I still find them to be the most important levels every day. But we didn't use that in-between level as a kind of in-between deciding factor. And we didn't also have the priorities set, right? We didn't have it set to where the open is the most important, the halfway point is the most important. But nowadays, that's all we say, because we've come to find that over the years. You know, we've been doing this for 6 years now. And that's just what the strategy calls for. Also, we've had some good inside influence from people within the group. We have really, really old content. I always like to say this because this man has no clue how far ahead of time he was, but Harland was so ahead of his time. And I wish I saw it when it was happening, because this man talked about the midpoint so fucking much, and then me and Leland started to take it more serious, like way later down the road, right? And then that's where a lot of that came from, you know. And then Leland definitely had some big influence as well with a couple things, you know, the gap up stuff, the gap down stuff. And honestly, the importance behind priority levels took us a while to really think about, because it's a kind of a weird concept. But, you know, just what are our most important levels, right? If I was ranking things, right, let's say, here, we'll do it like this. So this is like levels of importance, right? So I would easily say, you know, your ones are going to be your current day open, and then we talked about it already, but are trying to mark it again. I was off by a cent. How dare I? Wait, let's actually color that again. 1, and let's duplicate that. I want another 1. Why are these so small? Hell yeah, there we go. There we go. There's the big boy numbers. So 1, 1. These are the most important 2 levels on your chart every day, and that's what I'm talking about. I'm not talking about like when we mark emerging candles. I need y'all to understand these are all number 2. Every emerging candle is number 2. They are important, but they're not important enough for you to be like, well, I'm going to trade to and from it. That's my only thing I'm talking about. Like, dude, you have an open and you have a halfway point to focus on, and you're only focused on some emerging candle. Like, those are most of the time just targets, you know? And they can be used to trade from. I'm not saying you can't. I'm just saying you're way better off focusing on these more important levels. Have higher priority for things. That's why I said it's a weird concept. Because if you're someone like me who took years marking just emerging candles and then these short-term levels, it's kind of weird switching from that stable, consistent mindset to, wait a minute, there is a different way to look at this. You know, it's a little weird. A little weird. And let's mark some 2s now. So 2 would be like your previous day high, your pre-market high. I'm choking. Your pre-market low would be a 2. And then honestly, wait, where's the 2 at again? Here it is. Your previous day open is also a 2. I think there's a small amount of time where I said this was like another super important one, which it is. I truly see like the opens and closes as like some of your most important levels, but the open, especially for that current day, and then the halfway point of the previous day, and I think it's because of just where can it go, you know, how far away from this is it, and I think it's due to like averages, the amount of times that you'll see like a day once it's under its open. I don't know the numbers exactly, but I'm sure it's very high, that it does see that halfway point of that previous day, you know, on an uptrend, and in a downtrend it's probably the opposite data, if you know what I mean. But that's how I see things. That's how you should see the system. Like there is levels to be directional from. Like you could almost be intuitive as well. You know what? And you'll see that in my chat. You saw it today if you were reading chat at all. A lot of people were sitting there like Letterbuck, a couple other people in there. You know, I'm expecting it to go to this if this happens. Like they're setting a basic condition for themselves. Carter did it. You know, under today's open, I'm gonna trade to the pre-market low. He knows that there is a level in between this level and this level. So he's taking a pretty safe approach by saying, okay, well, any bearish setup under this, I'm just going to take it to pre-market low. Take it towards it. You know, get the best trade I can get out of that. That's a fair enough trade. Is he wrong for trading a short when it's an uptrend market on the daily? No. I mean, this is feasible. He can do this. So there are a couple instances you could see like where it's like you can kind of argue for both sides. That's why it feels like sometimes you'll probably feel like you're defending both bear and bull, and you really should be. You should never be looking at this as just a bear or a bull. You're looking for basic conditions set and for something to trigger. Can you have the patience to wait for it? No? Okay, well that's where your problem is. You have a lot of impulses. All of us do. You're nothing special. Everybody has impulses. But yeah, so that's how I see the chart. That's how you guys should see the chart based on the BB system. I'm not sitting here saying this is the only way you should look at things. I'm not sitting here saying this is the best way to look at things. I'm just saying this is how we look at things. It's the probabilities of things. And you'll see a lot of these things will come true. Like we talked about the base, the BTD dip that's probably going to happen during lunchtime today. Is that going to happen every day we have a pullback under today's open? No. But it's just a viable route to take from that. After you've fallen under today's open, there's only two things that can happen. We're either going to get a good move after a range under this level or above this level. It's as simple as that. They're going to go work back and balance themselves out towards this one. And I'm sorry that I don't have like a better intelligent way of breaking that down. And we have to throw numbers up on the screen like we're doing fucking, you know, numbered painting or whatever the hell it's called. But that's literally what the system is. That's all it is. That's why I really say that. Like, it really is nothing special. It's just super simple, super methodical. It's just a really weird way of looking at things. And it's using the same traditional levels you guys have been seeing us use for 5+ years now.